Hey, welcome back, my fellow investors and future investors. It's me, E.T. And remember, I'm not a financial advisor. I'm not your financial advisor. I'm just a self-taught investor who's always looking for ways to increase one's net worth. In today's video, let's talk about it video. We're going to talk about the CPI number that came out today. Today is the 10th of March. Now, the number that came out was 7.9% inflation. Another 40-year high. 7.9%. Please, there's no way that it's 7.9%. You better double that number, more like 15, 16%. Guys, have you looked at the price of just about everything that it costs just to live? Of course, we know gas prices is skyrocketing. It ain't no 7.9%. You see the cost of foods in your grocery store ain't no 7.9%. The items that you buy in the stores, everything is went up. Not 7.9. Come on. That is some monkey bull. If they honestly think that we're going to believe that. Dollar Tree. It's no longer Dollar Tree. They should change your name to $1.25 cents tree. Think about it. Everything used to be $1 in Dollar Tree. It's now $1.25. Is that a 7.9% increase? Everything is going up. Matter of fact, name me one thing that's only went up 7.9% compared to 1 year ago. Everything has gone up. Rent has gone up more than 7.9%. Realistically, if prices are only 7.9% higher now than compared to a year ago, it wouldn't be so bad. Yes, it's high, but it still wouldn't be so bad. We know that this here is some bull that they're trying to cram down the American throat and make them believe that. No, let's be realistic. Whatever they're using to come up with the CPI is evidently outdated. And I get it. You know, yes, inflation is high, but it's a lot palatable. If they say 7.9, yes, inflation is high, 7.9, then the true inflation number, which is probably 15%. These are elected officials trying to pull one over on us. We put them in office. They pander to us to get their vote, and then they get there and they do their own thing. They don't do the things that try to represent us and in the best nature for, or in the best cause for your average everyday citizen. No. Doggone, what do they call those? Those lobbyists. If you want to sit back and think about it, the lobbyists right now is really calling the shots. But I seen that number today. It ticked me off. What ticked me off more so than anything else is just the fact that there is no way that it's 7.9%. I know for a fact, all of you know for a fact, it's much higher. They need to come up with a better way of calculating inflation and being honest with us. Because evidently how they calculate the CPI is antiquated and incorrect. It is not a reflection of what's going on currently now in this economy and also within our lifestyles. That's just me. Sorry that I'm a little bit irate, but you know what? Come on, give us the truth. Come up with a way to give us a true indication of what inflation is, so that way we know that the pain we're feeling is true. Because trust me, the pain that we're feeling is a lot worse than 7.9%. Like I said, tell me anything, show me anything that's only went up 7.9% compared to last year. If you have a mortgage, your mortgage rate, what you pay on your mortgage went up. And even though you may have a fixed mortgage rate, The reason why your mortgage payments went up is because your property taxes went up, because the value of your home went up. My value of the home went up over 10% last year. You think I'm looking forward to paying an increased mortgage payment because my property tax went up? No, I'm not happy with that. All right. So what can we do? Time to stop all this ranting and raving and talking about all this monkey bull that the government is trying to put over on us. What can we do about it? Realistically, the only thing that we can do about it is, first of all, we just do what the rich are doing. How do you hedge? How do you combat inflation? You got to live with it. It's not going to change anything. You still got to pay those prices. But one of the things that you can do is you can start buying assets. Start buying and accumulating assets. That is key. Don't just go out here, earn an income, spend your money, and complain. Yes, I'm complaining, I'm bitching right now, but guess what? I'm in that process now of accumulating assets. Because as inflation goes up, the price of things goes up, the price of your assets will also go up. That basically means now I have a much better chance of increasing my net worth. So buy assets is one way to do it. Doesn't matter. You need to buy and focus on assets that you think are going to appreciate. In my particular case, I believe in equities. I'm in the stock market. I like real estate, but I don't want to be a real estate, I don't want to be an owner of real estate where I have to manage a real estate property. That's just not me. My choice of accumulating wealth and also increasing my net worth is through equities. However, one of the things that I do is I do buy a lot of real estate investment trusts, REITs. That's how I get into the real estate game. But there's other assets out there. Go ahead and start a business. All right. You got the crypto market that's out there. You got other types of assets, whether it's NFTs, non-fungible tokens, or possibly even some art, baseball cards, collectibles, that type of stuff there. But the bottom line is this here: start accumulating assets. Inflation goes up, the value of the assets goes up, your net worth goes up. Okay. Also, reduce your liabilities. All right. Your liabilities are going to be key, because when you look at your liabilities, 9 times out of 10 of your liabilities that you have, well, actually 100% of your liabilities that you have, you're going to be paying an interest rate. Why pay an interest rate? A low interest rate, I can see that. Anything 5% below, yes, that's okay. Anything above that, credit cards, student loans, car payments, if you're paying anything above 5%, you're being taken advantage of, period. So reduce your liability. Start paying down those credit cards. All right, if you get to the point that you get it paid off, you have one or two choices. At that particular point, you can either go back and using the credit cards and get yourself back in the same boat that you're in, or you can be the smart way. Do the smart thing. And the smart thing would be pay off that credit card every month. If you can't pay it off every month, that basically means you can't afford it. Don't buy it. Learn and start managing your money better. And the key to managing money is becoming financial literate. Understand how all of this works. Interest rates. That's how businesses make their money. How we make our money so far as investors, we're looking at yield, return on investment, or ROIs. What is your rate of return? And because the interest in our rate of returns works the same. It's a compounding effect. That's how the business make their money. That's how the rich get rich. Okay? And there's also exponential growth. Then you got to factor in the rule of 72. Goes both ways. Rule of 72 tells you how long is it going to take for you in order to double your money. It's based upon interest rate. All right? That gives you an idea of how long it's going to take. If you get 10%, that basically means every 7.2 years, you should be able to double your money. But check this out. If a company is charging you an interest rate of 10%, that basically means they're going to double their money off of you, 7.2 in 7.2 years. Works both ways. Now, an interest rate on a credit card, if you're paying 10%, that's good. But most of the people who are paying interest on their credit card, they're in the 20s, possibly in the 30s. We need to stop that. We need to stop, reduce that, pay it off. You're either going to pay it off every month or you need to just get rid of that credit card, period. It's called discipline. All right? Stop paying overdraft fees. That goes back to managing your money. Overdraft fees? That basically means you don't know what you're spending. It caught you by surprise. The fees, I've seen fees anywhere from, I haven't paid it. I don't pay overdraft fees. But I've seen people who pay anywhere from $10 to $30 per overdraft. Come on now. You've been taken advantage of. Stop it. Stop living from paycheck to paycheck. How do you stop living from paycheck to paycheck? It goes back to the second thing I said. Reduce your liabilities. Start living below your means. Start investing. We start living below our means, start investing. Eventually our net worth is going to go up. And as your net worth goes up, guess what? Your standard of living can go up. Fine, I can increase my standard of living, but I will still live below my means. Because guess what? I want to have discretionary income left over after I pay any bills that I have and any expenses that I have. Notice I didn't say liability. The only liability I have right now is this doggone house. And trust me, I'm going to get that paid off. Soon. I hate it. Even though it's at a very, very low rate. Still, just don't like that idea. All right. Okay, guys. I've stopped with my rant. But when I heard that this morning, it definitely ticked me off. It really, truly did. Also, when that number came out, I was watching the local news here in San Antonio. They were talking about, gasoline. Most of the places here in San Antonio have the gas is now $3.99 a gallon. On the news, they were showing this long lines at one of the Sam's Club where they had gas at $3.59. Directly across the street, the gas station was at $3.99. 40 cents per gallon difference. Sam's Club had long lines. People were waiting anywhere from a half an hour to 45 minutes to take advantage of that $3.59 gas. Now guys, I get it, you're saving money, but I'll be damned if I'm gonna sit in the line for 30 and 45 minutes waiting to fill up. My time is more valuable than that. That's just me. I'm not gonna do it. Me personally, if I needed gas, I'd have went to the $3.99, got my gas, and been on my doggone way. That's me. But then again, also play these little mind games with myself. Gas, yes. Might as well just say $4 a gallon. But guys, I learned a little trick from a guy that I used to work with. His name was Steve Barinki. This guy had a morning routine. He'd get up, get ready for work, drink his coffee, this, that, and the other. On his way to work, he stopped by the same gas station every morning and topped off his truck. He filled up every day. Now, I don't do that, but what I do is once I get down to 3/4 of a tank, for me, if I'm driving local, if I'm on the road, it's a different story. If I'm traveling long distance, it's a different story. But in town, 1/4 of a tank, I'm gonna fill up. All right, so 20-gallon tank, if I'm at 3/4 of a tank, when I fill up at $4, it's gonna cost me 20 bucks. Versus if I got down to E and filled up, it could cost me 80 bucks. And true enough, I may fill up 4 times within that same time period. But trust me, the mind game that I play with me is easy to swallow, filling up and paying $20 than to fill up and pay $80, even though over the same time period, the same amount, it'll be the exact same amount. That's the little mind game that I play. I'm okay with that. Because guess what? We've had times when they had gas shortage and people were panicking. At that particular time when it happened in San Antonio, about a couple of years ago, I wasn't panicked because guess what? All of my vehicles were sitting on full. Okay? Not a problem. I didn't do too much traveling that time, during that time period and so forth. After a week, everything went back to normal. But prior to then, people were freaking out. People were freaking out. So play those little games with yourself. So that way, you know, it won't hurt as much. Just trust me. If I had to pay $80 to fill up my my little bitty truck that I have, and I have a little Dakota, and I keep a car in the garage that, you know, if I decide to get out on the road, I can do that, then fine. But if I paid $80 to fill up that doggone truck, I would be pissed. Even though, and don't take this wrong, even though I could afford it. I can afford it because I don't have liabilities. This is the only liability that I have. Other than that, I just have this liability and expenses. Because I've learned my lesson, because I've been there before. I've lived paycheck to paycheck. It is not fun. I've lived to the point where I didn't have to, you know, where I wasn't tracking my net worth. And then once I did, I was at a negative net worth. Okay? But once I became financially educated and financially literate, and I started understanding that, I started working on building up my net worth. I realized that investing, the way to do that is through buying assets. I'm more focused on buying assets. I used to be focused on buying liabilities. All that can do is keep you stressed out, living from paycheck to paycheck. It ain't worth it. Especially now when we have 15% inflation. And I'm not gonna say it's 7.9. All right. Guys, with that being said, I'm gonna stop my rant. And you know, if you guys found any value out of this video, hit that like, subscribe, and notification button. And as always, guys, remember, you gotta save, then you invest, and you always apply what you know, because knowledge by itself is not power. It's the application of knowledge is power. Guys, I will see you on the next video. Take care. Bye-bye. Hey!